Okay, but so USD, let's start here. Voilà. Euro USD. I hope I'm audible. Can everyone hear me?
Okay, hear you.
So USD, let's run quick on everything that happens over. So now looking at this very beautiful chart here, very beautiful chart here on the monthly. New month, we close bearish. I'll be expecting this month to close bearish, and at least it will be taking where this low here, number one. But since we're in a new week, this is where we started. Now, there's something I spoke about, the thing about CRT. When you have the CRT, is it bearish candle? Yes, bearish candle. When you have a CRT, I want you to pay very close attention to this. I think I spoke about it before, but not in detail. So I'll retreat again. Yes. Twin candles. So hold on. This thing is a lot of work. So now we have this CRT here. Now, this is something I learned. Credits to Dr. FX. Something that I picked up from him while I was observing his chart and some of his videos. When you have a CRT like so, the expectation is the price to come back to this. The ideal expectation is the price to come back to that. Let's switch to the lower time frame. When you have something like this, the expectation is for price to come to this. Now, so the expectation is for price to come back to this bishop key level and then do whatever it wants to do, and then take the CRT high. That's the classic expectation. Now, there are times where, not even there are times, a lot of the times, or more times than not, price is going to come, tap this key level, mitigate some part of this week, but not everything. You hardly see price coming to this level, coming this low when it's mitigating. It's usually do something like this and then move, or something like this and then expand. So now, whenever price mitigates your CRT, pay attention to the part of it that has remained, the part of the week that was unmitigated, and this is what I mean. Just simple logic, nothing to kill yourself about. So now, having this thing here, this CRT, this next candle, came to do what? Came to mitigate part of this CRT, and it began expanding. Now, there is a chance that this setup here could do what? Could retrace back to this point before finally expanding, or it might expand and still retrace to this point to buy up a little before it drops or expand higher. Now, the reason for this is there is a part of this week, the part of the CRT that is unmitigated. If it has an algo structure, pay attention to it. It becomes a very, very high zone for it. Becomes a very, very high zone for potential setup. Now, take a look at this. This is the part of the week that was mitigated. We have a portion of the week that was not mitigated from where? From here. So when you have something like this, I just want you to map out the part of the week that was not mitigated. That was all. Mark out the part of the CRT that was not mitigated and scale to lower time frame. When you scale to lower time frame, you want to see a proper algo structure. I want to see liquidity. I want to see sweep. I want to see break. This is what I want to see for bullish case scenario. Something like this. I want to see a sweep of liquidity. Maybe a creation of either this type of liquidity and then a break. Either something like this, or I want to see sweep of liquidity, something like this. Yes. So be it internal liquidity, dealer liquidity, I don't mind. I just want to see an algo structure, a proper sweep of liquidity, break of structure. This is what I want to see on the lower time frame. When I see this on the lower time frame, I will trade this thing using this point as well. This week becomes what? It becomes our liquidity. Or whatever part of this candle that was remaining here in the lower time frame becomes what? It becomes our liquidity. And now we expect price to probably do what? Increase to this point and buy again. And I'll show you a few examples. I'll use the EU as an example. Now, even if price has left that CRT for a while, once you spot it, pay attention to it. It is a potential what? First trouble area. Now, take a look at this. How I anticipated a probably don't mind this thing being dark. This chart like this. People are comfortable with that, what? All right. So now, if you take a look at this left-hand side, starting for our buyers for the week. Let's start from the very beginning. Something interesting happened. We had a break to the downside. After having a break to the downside, we know, okay, we are bearish. We are going to sell. But when are we going to start selling? There's always going to be a retracement for the expansion. What areas do I want to start expecting sales from? If you were here from the beginning, we want to talk about GBPUSD. Remember what I started doing? Marking out these levels. Level number 1, why? Rejection, disrespect, liquidity, disrespect. Next level where? Yeah. These are hard time frame key levels that I expect price to do what? Begin reversing from. So now, taking a look at this liquidity, when would reversal start? That's the question. Now, look at this CRT. Price swept this low. We had this key level, this V-shaped key level created here. Price mitigated this V-shaped key level and expanded. This several weeks ago. This was in March. All this just happened afterwards, and price just turned back to it now. Something very interesting happened. The part of this candle that was not mitigated starts from where? Draw your rectangular box from this point. Pull it. Now, this is the part of the week that was not mitigated. This is the part of the CRT that was not mitigated. When I go to lower time frame, I want to see an algo structure. I want to see proper algo structure. Now, even from daily, I did not even have to go to H4. As you can see, this presented itself very, very fine. What did we have here? Sweep of liquidity. We had 10. We had a break of structure over this point, and we had an internal liquidity created here. I was using H4 structure to show everybody clearly. Can you see how this matches what we had? So this is what I wanted to bring into our attention, this thing here. Now, some people, some SMC traders, not all, will look at this thing ideally and they will buy from it and This is your setup now. Sweep of liquidity, break of structure. Buy from this thing. Buy to the very, very top. But now, see how we started the logic from key levels. We did not just start the level from. We did not just come and say, okay, this is, we started from somewhere. It made sense. We stepped to the lower time confirmation. We got the confirmation, and then we trusted this place as a possible point of retracement. And as you can see, if I was selling, this is going to be my target. But since price was very, very close to this place, I was trying to refine. This is why I hit stop loss, frankly speaking. I was trying to refine. I said, okay, maybe the retracement is going to come to this level here. I had 2 lines on the chart when I sent it. This is the second one. So I was just hoping there was nothing technical about this. This is like the other block. I just hope price will come here before probably expanding or something. Retracing or something. So now let's walk through how I approach this. Everybody, we're familiar with all this. It's nothing new here. So this is Sunday market opened. Nobody's trading this year. Candle number 1, candle number 2. So when I had this imbalance, when you have price action like this, please don't just try to sell from anywhere. For the love of God, for your sanity, don't just try to sell anything anywhere. Exercise some patience. Wait for things to form before you jump on the chart. There was no range here. Absolutely nothing, just void. So since we had a V-shaped key level here, price was definitely going to come and break it. If we were going to sell, price will do what? Price will come to break it. So just chill. Sit down for the next 4 hours. I got busy, left the chart, and if we had that break, where would be the entry? See this key level here that price was used before. That would be my solid entry. We've done this thing before. We're all familiar with it. Hello? Yes. So this would be my entry. My desired entry. So now, waited 4 hours for the next candle to form. What happened? This is where it happened. We now had a break to the downside. After break to the downside, what was next? Find your range. Find your range. An interesting thing here, this was the range. Sweep of liquidity here. And then we had what? This break of structure. You notice this candle had not come to this point. It had not tapped this. So I really hoped that I would retrace to tap my entry and then I can take profits here in peace. Well, it tapped this point here. This was my invalidation, and my error was holding this trade regardless of my invalidation being mitigated. Sometimes I used to see price to tap this thing, move here, tap my entry, move, hit this one, then it's start tracing. So I was hoping that would happen, but that was not the case. So now, following the range theory and all, we had liquidity, break of structure. Let's use something cleaner on M30. Now, interesting, very, very interesting on M30. We also had what? Liquidity here. What more could you be looking for? Entry. Where is a probable entry? Let's check H1 at 550 level. This one here. This could be a good entry. Hold on. Let me see if there's anything on H2. Yeah, this key level that got disrespected here. Nice one. Yeah, this key level here is what? This is my entry. Setup number 1. Stop loss were roughly around this point. So I want to maximize this thing as best as can. Be here for R. This was the idea. And as you can see, price did what? Invalidated the setup. SL. So after price invalidated the setup, if you notice to give a break above this high. Oh. Hold on. I hope everyone can see me. Am I audible? Someone, am I audible?
Yes.
Okay. So this was the first entry with stop loss. What happened? But something interesting happened. I would have said, okay, stop loss hit, but this M30 candle closed here, broke this thing entirely. This changed my perspective. This was no longer stop loss hit. This was a complete flip. The market was no longer willing to sell, and there was no range. If you look at this thing, there's no range here that will say, okay, I want to sell from somewhere. There's nothing, just blank. So what I usually do is wait for the next H4 to close, or I just, since we had a break on M30 to the upside, that was the only thing I needed. I knew this H4 was going to close bullish, was going to close out with this thing here. Hold on, let me hide it. So certain that we're going to break, and if you, let's say you're conservative and you want to wait and see how things unfold, after the close of this H4, what do you have here? Strong level created, sweep of liquidity, break of structure. This is something that we've seen on EU and G. This is not the first time, it's not the second time, it's not the third time. We've seen this thing happen a lot. Remember when we showed you this one here? Remember when we showed you this one here? Remember when we showed you this one here? It's something that we have seen. This one here, same thing. We've been doing this exact same thing for months. It's not the first time. So we have something like that. Next thing we need is what? We need an entry. A very, very good entry will be this left shoulder here. This will be a very good entry. Honestly speaking, that was where my limit. That was where my first limit was before I can modify. But then something interesting happened after the rejection of price from this level here. After price rejected this thing here, I was looking at this as this low here as liquidity. The price will come and take this thing and move on. Let's approach it standardly. This is what I approach my first liquidity. After price swept this high, I was expecting it to do what? Take this low. That would be validating this plan. Yeah. 100% validating the plan. My stop loss was where again? Yeah, this that was swept. Where was my take profit? Take profit was very early. Yes, this was our first validation. See, that was where the sell to be selected from. Okay, how many hours? Take a 5 hour here. Take profit number 1. This was the first idea. As you can see, price did not tap this at all. So missed entry today. And let's say we waited, the day closed. Eventually, the day closed. So let's move to the next day. We're trying to catch the reversal, the retracement from the origin, which did not happen. So let's wait for the next day. Next day, we wake up in the morning, the area again is staying. Let's see, what does New York have for us? See New York. What does London have for us? We move this candle here, candle number 1, candle number 2. Interesting thing that happened again. What did we get? A break to the upside. Yeah. Now, this is interesting. Price did not get to that other entry, but now we've gotten another break to the upside. This is a short redemption. First key level that came to my eye, first thing that interested me was this open close key level here. Why did this open close key level interest me? This is something that I will forever keep saying. The key levels that price have used before, it's your best friend. Sponsor this sell before I got disrespected. Now, what do I need? I need a range. Validate this setup. As you can see, I know everybody must have been thinking, oh, this here sweet break, this liquidity price come here. It is a solid. I'm not going to tell you that it's wrong. It is a very, very solid setup. But see the most recent break. When you are trading something like this, just follow the most recent break. You might get stopped out. I'm not going to lie to you. But then, chances of you getting stopped out in a setup like this after you've gotten that break and everything, it's quite slim. It's not very high. And if I get stopped out, no problem. I'm willing to enter from the bottom again. What do we have here? We had a range created. Remember, this thing we are trading here is a retracement. We are not trading expansion. This is just a retracement. Right, sweep of liquidity, break of structure. We have liquidity created here just before our key level. What were you looking for again? This chart. What else did you need to enter this thing here? TP. This is how many are 7.5. You were not looking for anything. There was no retracement. It just pumped to TP for 30 minutes consecutively till 12 p.m. It's very, very solid setup. But let's say you were not looking at that H4 key level. You're looking at the key level that price, the A-shape that price is expected. You're looking at that A-shape that price is expected. Let's see what that key level has for us on lower time frame. As you can see, no range, nothing that I would call a serious range here. See it here, sweep this break, but there's no liquidity. This is where price was. This is not okay. It had not even formed self. Yeah, you just be entering directly off of this point, and it seemed pointless. It really did seem pointless. But now you have this other key level with extra logic added to it. Take the risk, leave a little. If it hits stop loss, good and fine. You come back and wait for it here. This one hits stop loss, you don't trade again. Wait for this thing to take out, then you join what? You join the sell. You join the sell. If you hit TP on that one, 4R, you are 1R up. So you lost 2 trades, you made 1, you are not in drawdown whatsoever. You are still back in profit. Do the math. So this was the trade for it. After price hits your first this thing, you have no business targeting this one here. It's called first trouble area for a reason. Take out profit from first trouble area. Remember, we are trading a retracement, and we do not know when this retracement is going to end. There's nothing here, no liquidity, just very hideous bearish candles printing to the downside. So this is how I came up with EU for today. And GBPUSD, very, very similar, nothing different, just that this one tap. That's why I like trading both of them side by side. Sometimes one will tap, the other one will not tap. Sometimes two of them will tap and one hit the sell. 2 video swings. Very, very quickly shut down. So let's start from the weekly. Weekly closed bearish. And also, what did we have here? Weekly swing point. Interesting. Start from the monthly. Monthly close what? Monthly close bearish. Where are we going to start retracing from? First point of interest, this key level here. Second point of interest, this key level here. Since the sponsored price action multiple times. Third point of interest is key level here. Because this is also a CRT. But CRT does not mean it has to come to this level to do shit for you. So let's move on. Weekly. We're in a new week, this particular week here. And we have something interesting that formed, which is a swing point 1, 2, 3. Now, what are we looking for on the lower time frame? We're looking for a break on the daily. We get a break on the daily. Yes, we got a break on the daily. Interestingly, validates the swing point, which tells us that we are going to be giga bearish eventually. So now, interesting. Mapped out all the sell logic whatsoever, but now in order for price to sell, we actually need to retrace, we need to buy. So let's walk this through the way we did, how we came to that position. Okay, now, so this was not a CRT, it was actually seek and destroy. It came, what do they call it? I think we call it seek and destroy. Takes the low, takes the high, purged every single thing. It did not stop here and then give you an opportunity to buy. So this key level here is the first trouble area for sales. So if I want to sell, this is where I want to stop selling, just in case price decides to do me there too. Now let's go to H4, look for something. Nothing, no sort of range around this side here to consider this. So let's just focus on our price action. Daily close bearish. I'm still expecting more sell. So what do I do? Candle number 1 and number 2. Waiting for Asia. Asia has closed. Remember the 2 candlestick. So now I'm looking for a setup after Asia. But see this A-shape that price created here. I'm afraid of it. Price can just come and break to the upside if I'm entering aggressively or entering anyhow. So let's see if we have any range. We have any range. We don't have any bearish range. So we wait for more price actions, wait for more candles to trade itself. And if you don't have any range, just wait for H4. Don't be waiting for 30 minutes. Wait for H4. And as you can see, the next H4 candle that closed what? Bearish. It broke this level. Now, this was very, very interesting. Why? Price used this key level to sponsor what? Sponsor buys. And now it got disrespected. This would be a very, very good level to what? Enter or come to M30 to add more logic, more confluence to it. So what do I want to see here? There was no very textbook range. What I used was on the line chart. Sweep here and break here and use this as what? use this as liquidity. Yeah, there was nothing there's nothing interesting about this chart when I looked at it. Just this. So I just entered directly off of this key level nonetheless. Entered here, make sure that my invalidation was above this high here, because this was the last high. After this sweep, we got this break. Here. So I wanted my stop loss to just be there in case price goes deeper. And as you can see, beautiful stop loss. It's stop loss this particularly, and that was the first trade. And as you can see, what led to the stop loss led to what? Led to a break of structure here. Now this became what? Interesting price action. Yet again, very interesting price action. So if you're conservative, you can wait for your H4 to close, right? I did not wait for H4 to close. Once immediately I got this M30 break to the upside, I was looking for this trade to be fine. We had M30 break to the upside. So looking for something interesting, something very interesting in this chart. Started toggling through H1, H2, and I found an imbalance. I think on H1 and H2. Very interesting imbalance. Yes, this was the imbalance I saw. From here to here. We had this imbalance here. So when this H2 closed, this is what we had. So we had an imbalance here. Price would definitely retrace before expanding. That's standard. So what would be my entry here? The key level, the price had reacted from multiple times, then disrespected, go to line chart, formed some kind of left shoulder. So that was also interesting. So I just entered off of the direction. No overthinking, no trying to turn it into rocket science. I don't know where my SL was, so I really can't remember. I was aiming for this week here, aiming for this point here. Yes, but I had to change that. So this was my first entry. Yeah, it did go well. It triggered little. I just left my limits because I knew if this thing would open during Asia and expand, if it does expand during Asia, it's leaving me. That's happened on EU and GU several times. We saw it last month. So if you do not remember this type of thing happening on EU or GU last month, it means you've forgotten your price action. Go back and probably study it again or something. So this was the entry. My invalidation was somewhere around here. It's more than this. I was having more than 5 hours. It's like 6 hours. Doesn't matter. But this is where I was intending on stopping this trade because I did not mark my first trouble area. Sincerely speaking. So when I came back to mark my first trouble area, that was when I saw this. Yeah. I saw this. Yeah. And then finally this one. So I had to start restructuring. This is where I took TP2. Yes, so now the second entry that I had, it triggered, it was very late. I just woke up and I saw it. That's why I just entered. It's not that it was something shown to me in a dream or whatever. I just woke up, I saw the thing and I entered. That was after price had tapped my entry, created the CRT here. You can see this V-shaped key level that was created a new key level here. I looked at it, was it H1 or H2? Yes, it was H1, yes, H1. So we had this sweep here. This high was standing. So very interested in this high. Been digging. So what did I do? I knew we were running towards Asia. This was very late. This was 4 p.m. So I just opened up, set my limits at the V-shaped key level. Now, where would I put my stop loss? At this thing here? No. Terrible idea. Why? Time and price. Timing. Very wrong. So if this thing would want to retrace, take me out, definitely. If this was happening around 11 a.m., I would put my stop loss here. Happily. I'll take my profits here. But this was not 11. This was 4 p.m. already. I was entering the trade at very odd hour. So even for spread, Asia, and all that shit, where did I put it? It was not this far. It almost came to myself. Almost. Yeah, so roughly around this point. Or something on M30 I saw. Something like an order block. Was it M15? Or was it just on my broker? Yes, exactly. I saw this order block here. That's where I put my listing. The bottom of it. some people will actually be buying from here because this is liquidity, this is another block, and if it is going to play out, yeah, it should give me a good pricing chance. And then I just, it's like I waited, I think I checked it in the middle of the night, so I was underwater, spread was wide, but it had not taken me out, so I just waited. And as you can see, price did come here, and by 1 a.m. towards the peak of Asia, as you can see, we then started expanding. We expanded and expanded. So let's say you miss this entire move. You're looking for another place to enter or for today, this morning. What do we have here? Next candle. So now building your buyers from scratch now. Oh, we have CRT sweep here. We have V-shaped key level created. This is not your target. This here is not your target for any reason. It is not your sell. It is not your buy target. We are bearish. You do not expect sell CRTs to take the high. Expect it to react from first trouble areas. And if you are bullish, you expect your sell CRTs to react from buy from first trouble areas, not going to the opposite side of liquidity. So daily reject daily, hit forward to the upside, technical stuff, everybody knows how to do fast. Now, this is where we were. Asia here, 1, 2. Now, interesting thing again that happened, we had a break to the upside. Now we have how many? 2. Break number 1, break number 2. Where's going to be our entry? So if you had entered this confirmation from this point here, it would have missed you, but what would happen on EU? It would have tapped you. To tap you on EU, not tap you on G. Sorry. Yeah, to tap you on EU, not tap you on G. And you can recall, our first setup taps you on G, did not tap you on EU. So you have 2 setups already on EU and G running properly. No stress. So this would have been your entry. I think I shared this one. And the reason why I did this was there was also a range. I think what I shared was using this as the sweep of liquidity, break of structure, using this as liquidity actually. So my limit was directly here. I did not expect this retracement to be deep, so I did not start stressing about what key level to enter for. For the record, the reason why I said that is because of this has happened. This is my entry. Coming around here. And as you can see, price never retraced back to this level. It also did not give me any other entry because if I see this thing, I'll probably waiting for price here. Price will miss me again. Do this. Maybe if you are trying to trade this thing, but if I'm trading this, I'll still use this here as liquidity and try to enter off of this key level, which price will also miss. After price rejected this place and broke, I'll be waiting for price there. Yeah. And as you can see, there was no entry. So after this point, I'm not chasing this setup again. Just kept printing and printing and printing. And let's probably this CHF. Deb is the one that took me out on this trade. Oh, actually, she's the one that gave me a heads up. So let's go. USDCHF, I'm not going to lie to you. What I did here, because I'm buying EU and G. If I'm buying EU and GUD, proper factor is what? USD. USD cannot be buying and selling in one. One of your setup is wrong. Either you're a scalper. If you're a scalper, you're just entering quick setup. You can do your in and out and all of that. But if you are trading long term, USDCHF cannot be buying and EU will be buying. Does not happen. Cannot work there. It's contradicting each other. So what we had here was hold on. This was the beginning of the week. So we had bullish break, all of that. Looking for range before. I was selling Euro USD at first, if you recall. So I was trying to buy this thing. So as you can see what price did. Price came here, swept this liquidity. I waited for most of it to happen before I sent a position. We then had a break of structure and all of that. We then had this other break here again. Just after this break that I was suggesting this here as an entry. I sent this. This was the entry. But interesting thing, when the setup tapped, USDCHF, before the setup tapped, USDCHF and GU had already tapped. Now there's something very interesting with that. if you have this correlating factor, which is the USD in both your entries, and one has tapped and the stop loss is not wide and the other has not tapped, in order for the other one to tap, one has to hit stop loss. I hope I can do this. Hold on, let me try showing you an example of what that is. Okay, so now take a look at this time here. Let's go to EU. I'll show you something. When EU tapped myself around this time, this was what? 11:30. 11:30 candle was what tapped. When you go to when you go to USDCHF, check for the 11:30 candle. This is it here. See how far it is from my entry. It had not reached here. So in order for price to get to this my entry and for USDCHF to hold, price has to sell this much. If price wants to sell this much, it means EU has to do what? It means EU has to what? Buy this much. And EU buys that much, your position is as good as done, because this is where stop loss is. EU expands that number of pips. This is how many pips? 100, and this is 18 pips. Price expands this more. That's all your setup is gone. There's nothing you can do about that one. So when I had that and EU GU hit stop loss, there was no reason for me to execute this setup again. So I had the limit order. I just deleted it. There was absolutely no need to hold on to this setup again because it became invalid. Since EU and GU had changed, USD is the connecting factor had also changed. So best thing, wait. Just sit down and wait for something to happen. So now this is what happened. We had a sweep of liquidity here. Start considering this range and all, but I was not looking at this range. I was more fixated on EU and GU. I did not think about this because there was no liquidity. So one thing I just did, max the other block here. If I wanted to enter this thing aggressively, this is where I'll enter from because there's no liquidity, but I don't expect price to take this place. So this is where the reaction is more than likely going to happen from. But that was not the case. I'll show you how it is. I came about my entry. So now the next day happened, and this was where I woke up today, 6 a.m. This was after after Asia. So interesting thing again, as usual, we did not get H4 break to the downside, but we know we are going to sell. We know we are going to retrace. What was propelling that retracement? Swing point. That was the only convincing thing I needed to see. We had a swing point. Now I could start thinking of an entry. Without thinking of an entry. Swing points on H4, breakout on where? Breakout on H1. Now, you might have been considering, okay, price is now going to use this thing here as liquidity, and then come to this key level here, and then sell. The idea is fine when you're expanding, not when you're retracing. When you're retracing, you have to be more flexible. Because there's something interesting that way. We had an imbalance. Price rejected from this imbalance. Swept this high and did what? We had a break to the downside. We had a break. So we had this break to where? This point. This is a new range. This is how I approach retracement. If we were expanding, I'll repeat again, if we were expanding, I would have used this as my liquidity, but we are not expanding. We were retracing. That's why I trade expansion and retracement. Slightly different. Be very, very flexible the way you approach both of them, because when price is expanding, you are aiming for higher price. When price is retracing, just liquidity sweeps and all. So now we had a new range. Price had mitigated that imbalance. If price had not mitigated that imbalance, I would have placed my entry above. Why? That's happened before. It happened last year in I think roughly around September also. It's far. Let me give you an insight of that looks like. I sent the setup. It was when we were having those expansions on USDCHF. Yes, this price action here. This is when it happened. So, let me show you. Yes, that's it here. Cannot forget you. Very, very beautiful setup. Now, see the same thing happen here when we had this. When we had this imbalance here. So I could have come after this sweep here and this break. I would have come and say, okay, maybe I'll enter from here. But taking a look at this imbalance was not, at least at that point, I did not think this imbalance was mitigated. Honest to God, I did not think this imbalance was mitigated. So I knew price would still be coming for it. Here was my entry, this key level. You can check the channel. Just what date is this? November 25th. Scroll to November 25th. You see this exact setup there. So as you can see the difference between this one and that one. And these cells were what? I was expecting these cells to be retracement, though, not even expansion, because we were bullish. Look at this pattern. Buying. So I was not expecting these cells to even go beyond this point here. So we're going to stop here and then buying. To see. Came back to this very imbalance here. So since we had already mitigated the imbalance, back to this, I had no reason to start thinking, if price is going to come back for it. This stuff. I did not have any. I had no purpose for any of that. Since we had our sweep, we had our break. Now, only thing I needed was new entry. And what popped again? What caught my eye? This here caught my eye. Another imbalance. Very, very clear imbalance here. On H1. Price is going to be balanced, old imbalance, and what's the second thing there? What's the second thing? Sweep liquidity. Rebalance or imbalance, not sweep liquidity. This was a key level, I think, roughly around, was it here? I think I entered directly up of this point here. Yeah, somewhere around here. But now we had this imbalance. You can look for a key level that overlaps with this imbalance. A price has used to what? Sponsor price action before. What is the closest one? This here. Sponsor. Then disrespected. There's no check higher time frame. See, this is the closest that we can see on the higher time frame. So this is your entry. Where's your invalidation? Here is sweep problem. When you like this, it's invalidation. Some people will be like this. Well, if I get stopped out on this trade and it goes my way when I put my stop loss like this, it's paying. So let me be a sensible trader with this 4R. Now, at first, this is where I was aiming for. Now, with like this was my take profit ball. Then I started seeing this thing here. After I saw the be set up, I started seeing these weeks here. Once I started seeing things like this, price has other plans. So instead of allowing this external range to be my take profit, I said, okay, if we are going to buy, where would the buy start from? Take a look at this key level. This is what caught my eye. So if this is going to cause, if this is a probable key level price to buy from, why am I keeping my take profit here? Why do I want price to take this thing out by all means? Modify my take profit to this level. See what happens. And price started retracing here. So once this that happened before, that's the simplest thing I can see. This thing where it comes very, very close to where I want it to react from, and then it just starts buying. So this thing buying up here. I was like, come on, this thing might come to the top, but you can see the next candle just came. Next thing I heard, I was still on my phone. I was about leaving 25, and then I just heard the other sound. Weak, and then started buying to the top. Now, if you remember when the voice note I sent in the morning, what did I tell you? I told you that people are going to do what? People are going to come here and tell you that this is what? This is liquidity. Some are going to come here and do what? What are they going to do? They're going to put the entry here. If you don't recall, go back to the voice note. Stop loss here. And they are going to try expanding this thing to this level. This will be the idea. But what the price just left liquidity. External, when they say external liquidity, it is still money. It is somebody's money that is in there. And as you can see, what the price do, came here, gave you the idea after rejecting the liquidity. Oh, maybe it might happen. Or happen when took external liquidity, took everything here. If you like, put your stop loss here. Put your stop loss here, SL. If you like, give few pips, SL. Say if you are doing something like this, you will still be underwater now, sir. So completely pointless. Anybody that tried this, SL, why? We were always going to buy. We were never bearish in this market. Look at the structure. Everything about it is bullish. We still want to buy. But before an expansion, there will be a retracement. This is expansion. There will be some retracement before we eventually do expand. And yeah, basically, that was all that has happened the past 2 days in the market. So I'll stop the recording here, then we'll just, if there's any question, we'll deal with that before.